Hello everybody, it's Jennifer with Get Your Credit Perfect Now, and in this video I want to talk to you about how to determine whether or not you need life insurance. And what I'm going to do is actually give you a quiz that you can take so that you can determine whether or not life insurance is something that you need to add to your financial planning. But before I do that, I want to just take a moment and give you your props on actually tuning into this video and getting more information on how you can protect you and your family. Just the fact that you are being proactive and trying to determine whether or not life insurance makes sense for the protection of both you and your family says a lot about your financial maturity and about the love and care that you have for your loved ones. So definitely want to give you respect on that. So what I'm going to do is talk to you about, I'm going to ask a few questions that you can review and even write down so that you can determine whether or not life insurance makes sense for your specific needs. Now, I want to just pinpoint, a lot of people will say that life insurance is for everybody. And quite frankly, that can be true. On the surface, it may seem that somebody who is single and doesn't have any children may not necessarily need life insurance. However, the thing to keep in mind is that there are a variety of ways that you can use life insurance for what is called living benefits. And that basically means that it can protect you in the event that for some reason you become disabled because of some type of illness, say you get cancer, you have a stroke or something along those lines. A lot of life insurance or whole life insurance policies have what's called living benefits, which would actually pay you a certain amount monthly while you are disabled. So that is actually very, very compelling. Additionally, having life insurance helps protect your loved ones, even if you are unmarried and you don't have any children. If you have property, if you have, anything of value that, is going to be here after you pass on, definitely having a life insurance policy can help ensure that the state, the government, whoever does not have legal claim to take away that asset from your family. Additionally, you may want to consider the fact that, of course, people have to bury you once you're dead. So you want to make sure that you have sufficient money on hand so that those that you love won't have to be stressed out during one of the most stressful times that can take place. So let's just talk a little bit more about some of these questions so that you can determine what makes sense for your specific needs. So the first question that you want to ask yourself is how many people are dependent on your earning capacity? Said differently, that just means how many people are dependent on your income. So let's just say that you are the sole and primary breadwinner in your household. If that's the case and you have a spouse that does not work and you have 3 children, then you would say, okay, I have 4 people who are dependent on my income. If that is the case, you definitely will want to look into life insurance because in the event something unexpectedly happens to you, you have 4 people who would suffer great loss if, financially, if you were no longer here. So life insurance would help to give them a benefit so that, in the event that something does happen to you, they have the proper income in order to pay the bills, keep a roof over their heads while they transition, and whoever can go ahead and get employment or seek income can do so without having to have their backs up against the wall. So that's one thing to keep in mind. The second question that you want to ask yourself is how much money would your dependents need for their living expenses? So with that being said, let's just say that you have a family of 4 and you know that normally under normal circumstances your bills and expenses total out to be about $3,700 a month. That's normal, what you pay monthly for your bills, your mortgage, all that good stuff. So if that is the case, you want to keep in mind that if something were to happen to you unexpectedly, you want to have some type of contingency that would take care of your family members for at least 6 to 12 months so that they can get on their feet, make proper decisions without having to, be forced to sell off property or do, certain things just because they are in dire need of income. So this is something that you really want to keep in mind when it comes to determining whether or not you need life insurance and what type of life insurance that you'll actually need. Number 3, you want to consider how long would it take for your dependents to become self-sufficient. Now, if you are, let's just say that you are the sole breadwinner of your household and you have a spouse that has been out of the job market for 20 years. If that is the case, more than likely it will take them more than a month or two in order to find employment. That being the case, you want to keep in mind that, okay, you don't want to create a situation where your spouse is in dire need and really can't survive for a month if, your income was lost. You want them to be able to, have a cushion so that they can get back on their feet in the event something does happen. It's not something where it's do or die. So that is something that you want to also consider, how long will this, the people in my household need in order to become self-sufficient. And, of course, savings can take care of some of that. And, having a certain type of life insurance policy can also be a great subsidy to that. And even better, it can be a tax-free asset that you can use to do so. The other question that you want to ask yourself are what assets will be available to take care of your dependents' immediate financial needs. So that is to say, do you have bank accounts with, savings accounts that have, 6 months worth of your bills and expenses in it? Do you have stocks? Do you have what type of liquid accounts could somebody access in the event that something happened to you where they would be able to pay the monthly expenses out of that particular account? If you don't have, a savings account or something along those lines where you have saved up, at least 6 months worth of your bills and expenses, then you really, number one, you really should consider starting one of those because, again, especially with disability, most disability policies don't start to pay out for at least 90 days and sometimes up to 6 months before they actually start paying benefits, and they are usually a 70% or less of what your current monthly salary is. So definitely you want to think about that when it comes to determining. And some of these questions you may not automatically assume that life insurance would take care of these type of needs. However, life insurance policies, specifically whole life and universal life policies, they have so many applications that will provide living benefits where you can take money, you can basically borrow money from yourself that is earning interest and non-taxable. There's so many different ways that you can use that one policy to not only fund your retirement, to pay a death benefit. There's a lot of different options there. So these are questions that you do want to talk to a licensed insurance professional to get more clarification on what your needs may be. But these are some good questions to get you started. Another question: after you die, how long will it be before your property is turned over to your inheritors? So that being said, a lot of people don't realize that regardless of whether or not they have a property, if they have somebody else as a co-owner, however, if you die, that property can actually go to probate. It will more than likely go to probate, particularly if you have a will. The probate court is going to determine who is going to get paid out as a beneficiary according to your will. They're also going to look at, any type of bills and expenses that you incurred that you still owe money on. They're going to take any assets that you have, and if need be, they may have to sell those assets off. Like if you have a house or any other type of valuable property, they may sell that item off in order to pay taxes or pay creditors. So it's very, very important that you understand, you understand how you are setting up your whole financial plan, in a sense, because if you just rely on a will, that does not keep your property from getting taxed. It does not really take care of the seamless transfer of property to individuals that you may want that property to go to. Really the most constructive way to transfer assets and to hold assets is within a trust. A trust, if you're not familiar with it, and I'm not going to go too deep into it with this particular video, but it basically protects all of your assets, whereby you are not the owner of any of your assets. The trust actually owns all of your assets, and because it's set up as a separate entity, if you die, if anything happens, all of the assets of the trust are allocated to individuals that the trust determines. If you are the individual that sets up the trust and you are directing the trust, then you can determine how assets will go to each individual. And accordingly, when that's done, none of the assets are taxed or anything along those lines. It's a very, very very powerful product that the wealthy have been using for generations to protect their assets, avoid taxes, and to transfer their money and their property to future generations. So definitely, if you're interested in learning more about trusts and wills and how you can get that set up, I'll have more information at the end of this video. Another question that you want to ask yourself is, will your estate owe substantial debts and taxes after your death? Again, that's going to be a function of how big your estate is. If you have, multiple properties, if you owe, taxes, if you owe any type of liens or anything like that, all of those things would determine the amount of taxes and debts that you may owe even after you are deceased. And another thing that you want to keep in mind is your business. If you have a business that you want to see around after you are gone, you definitely want to look into getting life insurance to protect your business. And what that will do is actually help the individuals that will take over your business to have extra money, so that in the event that you do pass on, they have operational expenses to cover for a certain period of time while the business reorganizes and restructures if necessary. So that is a very, very important thing that you want to consider if you are a business owner, making sure that you have some type of coverage that will protect your business from demise after something happens to you, if you are sick or if you were to pass away. So those are some of the questions that you want to ask yourself when determining whether or not you need life insurance. One of the things that we do offer, at Get Your Credit Perfect now, is a service that helps you with will and living trust preparation. That is actually something that is included in our services when you become a protection plan customer. So in addition to getting your credit restored, you'll also be able to have a living trust or a will set up that will be able to protect your assets and help with the transfer of the things that you own to your loved ones without being taxed and without all of the probate and all the heavy lifting that comes along with that most of the time. There's a lot of other services that are included in that plan, and I will just say click the link below this video to get more information on what all is included, but definitely make sure that you understand how and why you should protect yourself with life insurance. It's a very, very important aspect of creating a strong financial plan. So I hope you enjoyed this video. Make sure to like, comment, and subscribe, and I will look forward to seeing you on the next video. You take care. Bye-bye.